Hi, my name is Grace Cisna. I'm the CPA on staff with ProjectionHub, and today I wanted to take a little time to walk you through our Cloud Kitchen template. This template is going to help you develop your financial projections for your Cloud Kitchen. And by Cloud Kitchen, we mean any sort of food business that's using online platforms such as Ubereats or DoorDash to deliver food to customers. So typically, this type of restaurant does not have any sort of eat-in kitchen area. It is really focused on delivery. And this is sort of a new model we've been seeing a lot of during the pandemic and in response to the pandemic and lots of restaurants being closed for in-person dining. We've seen a big shift over to the Cloud Kitchen type model. So in this financial projection template, we are going to have you enter information about your business. And from there, the template is going to develop your financial projections for you. So you will enter data on these light blue input tabs here, which we'll go through in this video. And once you've entered all your data, your financial projections, three types of financial statements, the income statement, the cash flow statement, and the balance sheet. These will be produced by the model and pretty much ready to hand to investors or to your bank or to be used for internal planning, whatever your purpose is. So let's show you how to develop these financial projections for your business. So for starters, we're going to jump onto the Input Assumptions tab, this first tab shown in the light blue color here. And on this tab, you are going to fill out all of the cells in that corresponding light blue color. So light blue is directing you to the areas that you need to make changes. You'll see that there's data already in here when you download the file, data already in those light blue cells. And that is just example data. It's not industry standard. It's not even a suggested amount or a recommendation. That's just data to show you what we're looking for as you fill out this template. So we're going to look for a company name, and that's going to go at the top of all your financial statements. Projection start month, usually this should be a January start month, but you can start it at any time during the year. Typically, we do see a January start date. And then in investment, so that's the investment amount. If you are personally investing in the business or you have outside investors, you have three lines here where you can enter investment. The month of an operation invested, that's the month after you've started operating. If you see a month 0 here, and you'll see that in the fixed assets category as well, that just means that you're investing money before operations begin, or you're purchasing fixed assets before operations begin. You can also enter any accounts receivable terms. Most of the time for a Cloud Kitchen, you're going to see 100 and 0, and that just means that all of your customers are paying you at the time that goods are provided. Inventory, that's the food inventory that you have on hand. So you're going to have a beginning inventory balance. That's the inventory you purchase right before you start operating. And then the model is going to calculate inventory at the end of each month for you. And that right now is calculating to be 10% of next month's inventory costs or cost of goods sold. So that is going to move up and down with your sales. And that's a great way to keep your inventory sort of tracking along with your sales. Obviously, if you change that percentage, it's going to go up and down. You can also enter fixed assets on this tab. Fixed assets are things, we have examples here: leasehold improvements, equipment, furniture, refrigerators, stoves, etc. You've got 6 lines to enter fixed assets, and we always recommend, if you have more than that, which many do, create some categories. So instead of having stove, refrigerator, etc., call those equipment and put them all together. And you would add up the value, all the things in that category here, and then you're going to enter a life expectancy in years, and a salvage cost, and those items are going to help the model calculate depreciation expense, which it does for you. And then you're going to enter the month that you purchased them. The last piece of the Input Assumptions tab is the loans at the bottom here. So you're going to enter for any of these 4 loans. You can enter up to 4, the loan amount, the interest rate, the number of monthly payments, and the month that the payments will begin. Note that the model is going to assume you receive the cash from that loan the month before your payments begin. So if your payments begin in month 4, we're assuming that you receive that cash in month 3. The next tab is the Input Revenue tab, and this is where the bulk of the model is. Most of the financial model happens on this tab. So at the top here, we've got a customer acquisition model, and we look at lots of different sources of customers. So we have, for example, different types of online platforms that might direct customers your way. You could have your own website, you could have orders via phone, and you can enter a start month here. So that's the month that you go online with those items. So maybe you're going to start just on Ubereats and then move on to DoorDash or Postmates, Grubhub, etc. in later months. So you'd enter the month here that you start working with all of these platforms. And then we look at the number of orders per month coming from each of the different platforms. So this is to kind of help you estimate the total number of orders per month that you think you're going to see. You'll have an annual growth rate here, so that's the orders growing over time. And then we look at the percentage of fees, and there's two types of fees that you could have with any sort of platform. There's percentage of order value. So for example, Ubereats takes about 20% of any order that's made online. And then there's also flat fees. So for example, DoorDash takes a $2.99 flat fee from many restaurants for every order. So they can either be calculated in the percentage form or in the flat fee form. Some platforms, for example, Grubhub, have a percentage as well as a flat per order fee. So you'd enter those here, and that way the model can calculate out all those fees going to the different online sources of revenue, because those really can be substantial in this Cloud Kitchen model. So from here, the model calculates out the number of orders per month from each of these sources. So you can see our Ubereats starting at 150 orders a month, and then it grows at that 30% annually as described here. So we've got our total orders per month as all of the different sources of revenue come online. So once we know how many orders we have in a given month, we need to look at what the value of those orders is, or revenue per order. So we've got total orders here. We also have handy reference values here. So orders per day and orders per hour. That can help you figure out if you're entering reasonable amounts here. So once you've calculated out the number of orders, we're going to look at the menu here. So you can enter the different items on your menu. Again, feel free to summarize. If you offer several different burgers, but they're all in the $9 range, you can just enter, burger $9, or basic food item $12 is what we have here. So you don't have to enter your whole menu. Think about dividing things into categories, things that are similar prices that sell at equal rates, and that also have a similar cost. So average price to customer, that's what you charge for the food. And cost, that is the cost of, for example, for a burger, that would be what you're paying for the ground beef and the bun and the condiments and all that. And then you look at the average number per order. So in this example here, the average order includes 1.1 basic food items, 1 drink, half of an add-on, 0.5 add-ons, and 1 additional fee of $3. So that means that there are 3.6 items per order. Really, that's 2.6 plus the additional fee, if we think about it here. And then the average order value is going to be the $12 times 1.1, $3 times 1, plus $8 times 0.5, etc. So figuring out that average order. And just think about this trips some people up. 0.5, how can you have 0.5 add-ons in an order? Well, just that means about half of people are using a single add-on to your menu. So we calculate out your average order value, and then of course that has a growth rate associated with it as well. Maybe your prices go up over time, or people begin ordering more things. So you'd enter a growth rate there, and that average order value will grow over time. And to figure out our food and drink revenue, simply we take this 450 orders per month and multiply by the 2320 to get $10,440 of revenue in the first month. So that is your food and drink revenue. This also calculates the cost of food and drink. So that is these costs here being added up and averaged out over the number of orders. We also calculate out all these service fees associated with, for example, Ubereats, DoorDash, Grubhub, Postmates, etc. So those, again, can be quite substantial. So the model takes all those, it looks at these amounts from this model here, the number of orders from each of the different services, and calculates out your app service fees. We also left catering revenue in this model. That is in all of our restaurant models as well, or some of our restaurant models. And so a cloud kitchen may have a sort of catering component to it as well. So we have a catering model here. If you don't cater, feel free to just enter 0 in the number of catering orders per month, and that's going to zero out all that catering revenue for you. So that doesn't apply to you, that's fine. If it does apply to you, you can fill out the number of orders per month and the revenue per event, as well as the labor and food costs, etc., and that will calculate out for you. The next tab is the input direct labor tab. So direct labor is a big cost associated with the cloud kitchen, all those people that are prepping the food for you. So on our direct labor, input direct labor tab, we look at the number of hours you're open per week. Opening and closing hours, those would be the hours prior to opening in the morning. Somebody that has to come and unlock the doors and get the equipment running and everything prepped. And then the people that stay at the end of the day to clean, etc. Those additional hours that people get paid for outside of your actual open hours. You can enter your average employee rate. And again, totally an average here. You might have some people at $15 and some people at $12. Just take a rough estimate of the average for those employees. Transactions per employee per hour. What this does is it allows the average employees per hour to increase over time. So in this model, it looks like we have just one hourly employee per hour because our minimum is 1. But if we take this transactions per employee per hour down to 1, say one employee can only handle 1 transaction per hour, then the number of average employees per hour is going to go up over time. So as your number of transactions per hour increases, so will the number of employees, unless of course you have very efficient employees who can handle a number of transactions per hour, in which case the model is just going to use this base minimum hourly employee amount. Also on this tab, you're going to see a summary of your total cost of goods sold. So you've got a couple different sources: service fees, food and drink costs, and direct labor, and those all get carried through to the financial statements. The next tab is the Input Other Expenses tab. And on this tab, you would enter all those operating expenses other than direct labor, salaries, and cost of goods sold. So we've got a lot of examples on here for you: advertising, accounting, point of sale services, etc. There's a couple ways that you can calculate out your costs here. There can either be a fixed amount. So example, advertising is starting at $3,000 per month, or they can be calculated as a percentage of revenue. So a lot of times credit card fees are a percentage of revenue. So if they're a percentage of revenue, you can select which type of revenue: either total revenue, so a percentage of all of your revenue, a percentage of your food and drink revenue, or a percentage of your catering revenue, if that applies here. Now, a lot of times with the Cloud Kitchen, those credit card fees are already included in the Ubereats fees and all that. So in this case, we just included credit card fees as a percentage of catering revenue, but it could be that it's a percentage of total revenue as well. Note, if you enter something here in month 1, you can enter something across the board, but the model will automatically factor in the inflation rate for you. That inflation rate is coming from the Input Assumptions tab, row 11, cell D11 right here. So that's where it's pulling that in from. You can see the this POS service amount starts at 200 and jumps up to 206, etc. So that's where that's coming from. You can enter your effective income tax rate for the various years here. Just a note about expenses, and we left a note for you at the top. These are all monthly expenses. So this advertising is $3,000 a month for month 1, month 2, month 3. It's all $3,000. It's also $3,000 a month in month 4, 5, 6, 7, 8, every single month. So even though we kind of break down the categories differently, it's still looking for monthly amounts. So it's going to be $3,090 for every month in year 2. We break it out that way so that you can enter operating expenses. Sorry, not operating expenses, startup expenses in the first 3 months here, but then you don't have to enter all 60 months of expenses. The last input tab is the input salaries and owner draw. So salaries, if you have a manager, supervisor, any salaried employees can be entered on this tab. Job title, salary, taxes if applicable, benefits again, if applicable, month started, month ending, month 60 is the last month of the model. So everybody ends at 60, if not before. And then you can enter multiple employees. If you had 3 managers, for example, you could just put 3 here, and it would triple those costs. And you can give them an annual raise as well. Owner draw is one way that you, as the owner, can pay yourself. You can pay yourself a salary, or you can just draw funds out of the business. If you plan to do that, you would enter those amounts down here for funds that you draw out. So that's all the input tabs. And once you've filled out all those light blue tabs, you will see on the green tabs, your financial statements will populate for you here. Some nice graphs and charts on the at a glance tab. We've got the income statement summary, the cash flow statement summary. Income statement and cash flows are very similar. Cash flows does include non-revenue and non-expense items here. So cash from loans, cash from investments, cash paid for loans, cash paid for fixed assets as well. Those all go on the cash flow statement, but not the income statement. And then we have the balance sheet here. Just to note, our balance sheets are always going to balance. That's one of the big struggles of the DIY financial projections when you're building them on your own. Getting that balance sheet to balance is very time consuming and very challenging. We've worked everything out in this model so it calculates correctly for you. So that's not something you have to worry about. We also have those same 3 financial statements, but in the month-to-month format. So you can see every single month for all 5 years. And this is especially beneficial. I always point clients to the cash flow statement, looking at your cash at the end of the period for every single month, making sure that your cash balance stays positive. So this is a great way to figure out how much you need to invest in this business to keep it operating. So the example data we have in here shows a profitable business that keeps the cash above zero and therefore doesn't run out of cash. So that is a brief overview of our Cloud Kitchen template. I hope that was helpful and useful for you. If you have any questions about this template, feel free to reach out to us at support@projectionhub.com. We're always willing to work with clients who can help you fill out or modify this template. If you're mostly happy with it but need some changes, feel free to reach out. Often you'll be speaking with me directly, and I'm the template creator as well. So again, don't hesitate to reach out if you have questions.